The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 2nd, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs, words of wisdom brought to us by our extraordinary producer who makes everything that each of us contributors here at TFNN do seem so seamless, which I can assure you, folks, it is not. And Al, he starts his day with the following incantation. He starts off by saying, hey, watch your thoughts, for they become words. And watch your words, for they become actions. And watch your actions, for they become habits. Hey, watch your habits, for they become your character. And watch your character, for it becomes your destiny. Nothing could be more beautifully stated than that. Let's go check out the destiny of the markets. Thank you, Alberto, in the production room. Right now, we've got the Dow. It's up 18 points. It's trading out at 16,550. S&P up 2 points, trading at 1887. NASDAQ up 6 points, trading out at 42.74. Russell 2000 up 50 cents right now. It's trading at 11.89. NDX 100 up 5 points. New York Stock Exchange up 8. Got the Philadelphia Gold Semiconductor Index, the XAU up 2.5%, up $2 and change. Our call-in number is 877-927-6648. If you give me a call, I'll be happy to take a look at your stock chart here. Popping to the upside this morning, leading the charge. You got Priceline up $10, Intuitive Surgical up 8, Accelerin Pharmaceuticals, XLRN up 15% this morning. That's up $5. Myriad Genetics up $4. Biogen, BIIB up $4. Pioneer Natural Resources, PXD up $4. Mankind up $3. Tesla up 3. Vision China Medical, VISN up 13%, up $2 and change. To the downside, Intercept Pharmaceuticals down $9 and change, off about a little less than 3%. VIP Shop Holdings, now it's been up for the last couple of days. It's giving back those gains as we speak. Right now it's off $4.40 out here, off about 2.5%. Agrium, AGU, down $2.70. Apollo Education off 7% this morning. It's down $2.60 out here. Netflix off $1.80. So go take a look at what's going on inside the indexes. So what do we know here about the NDX 100? Well, we know a couple of things. Number one, the move lower over the past couple of weeks was only able to push down into the trend line that began back here. That was a trend line beginning on June 24th out there. Just use that as your touch point. I'm using the low out here from February 5th as my next touch point out there. And you can see that price pushed down into low. So what we do know about the NDX 100, it being one of the weaker indexes, it was not able to bust the trend out here. You get through that trend line. Remember now the trend line's rising, right? So you don't need to get down to the swing point low from March 27th to break that trend out here. And that's something we want to be paying close attention to, because what we have seen here, and that also we had was a 1 to 1.618, A to B equals CD to the downside that was formed as price was pushing down into that trend. Now, what have we done? Well, what we've done, if you were the NDX 100, is you've now made the 0.618 retracement. That number, 3663.73. Guess what you're trading at? 3663.75. How does that work? I don't know. I just know it works. Now, does that mean that that's where price stops? No. The NDX 100 could easily go up to its next bar being the 0.786 retracement level. That would be 3696.54, and some type of higher close today. Hey, because my candle looks red, that doesn't mean it's bearish. It's not bearish here yet. In order to get bearish, you'd have to see it close below yesterday's open. Of course, we know in today's trading market that anything is possible, so that low out there, or the open, was 36.15. That's what you'd want to be watching here on any kind of reversal that we could see take place during the day today out there. If it moves higher, not only could it take on the 36.96 level, I'd have to say it will go ahead and move into the either the top of the downdraft that began on March 21st. That would be a logical spot at 37.17, and 37.17 would also happen to be a test of the swing point from March the 6th out there. So if the markets are going to move higher, that's the next area that we want to be paying attention to inside the NDX 100. If, on the other hand, the NDX 100 here, if it does stop at this 0.618, if we do see a reversal candle, then guess what? Then this would be setting up potentially an A to B equals CD to the downside. And if that's the case, we're going to see that trend line broken out here, and that's where it will go ahead and give you the largest of signals out here, because it'll be the strength that has carried us up that right now is still weak. Even though it's made a 0.618 retracement level, guess what, folks? All of my signals are saying right now the NDX and the Russell 2000, the nice bounce that we've seen here has been nothing more than a counter trend rally. So as bullish as I'm showing the charts, because what the charts are, just giving you both sides of the trade out here. Everything over the past several days, and I've alerted subscribers to this, is that, in fact, last week I said that we would be expecting a bounce, a pretty decent bounce. That's what we've gotten out here. But I also indicated that that bounce that we were going to get was most likely going to be a counter-trend move out here, and we really need to be paying attention to what was going on inside the NASDAQ and the Russell 2000, because what I can guarantee you is coming off the bottom in 2009 and all the way up, with the exception of for one small period of time, and it was a small period of time, we have seen the small caps and the small caps inside the NDX lead the charge on the way up. And when they're not leading the charge on the way up, any bounce has to be suspect. So these guys, meaning the Qs, meaning the NDX 100, meaning the IWM, they got to get their butt in gear in order for this to be more than just a bounce out there. So that's what's going on inside of the NDX. Let's go see what's going on inside the Russell 2000 as well, since I gave that one away to you. If we take a look at the Russell, it's come from the swing point high, being the trading session from March the 4th, down to the low out here on March the 27th. We're trading right now at approximately the 0.618 retracement level, which is 1187. Now, yesterday was a nice strong day inside the IWM, inside the Russell 2000. And it closed with a wide-ranging bar. If you were to measure the strength of that bar, you'd have to give it on a scale of 1 to 10. Hey, what do you want, 1 to be strong or 10 to be strong? Whichever side you want to be strong, it would be a 1 or a 10. Let's make 1 being our strength out here. That would be a 1. That would be as strong as you possibly can get with regard to its bar yesterday. What does it do? It opens at the low. It closes at the high out there. Almost sounds like I was going to sing Basil Chapman's song out there, but nah, I don't even have it memorized and not going to. So and typically markets don't end on wide-ranging bars like that. So what does that set up? That sets up maybe we just have a day that trades sideways out here and doesn't give us enough information. But what this too could be setting up, if today's high ends up being the high out here, this too could be setting up an A to B equals C to the downside. So if we take a look at the Russell 2000, and I see I've got a little red trend line that is drawn out here. Let's go take a look at the Russell 2000. And if we take a look at its trend line, heck, this trend line here takes me back. I'm using the December of 2012 bottom out here. Now, ordinarily, someone might go and take a look at the swing point back here from November 16, 2012, and that would not be wrong to do that. But as I do remember, the last time there was really substantial fear in the marketplace, it happened to be right around that December low. That was when we were talking about falling off of the financial cliff. Aren't you glad that that financial cliff language that was thrown at us for so long is gone? Well, that financial cliff scenario is where I've taken the trend line out here. That was December 31st inside the marketplace. So if I use the low of that session inside the Russell 2000, 831.18, it's nice because it allows us to use a series of different touch points as markets came back and tested that area. It did it back in April of 2013. It did it again in June of 2013. It did it in February of 2014. And what's interesting here about the move lower this last go-around into March, it did not get down to that level. So where we took a look at the NDX 100, how it just tested that area, the Russell 2000 never made it down to that range. However, we do want to be paying attention to it, because if this is nothing more than a counter-trend rally, what we want to be paying attention to, what we have to be really focused on is, hey, what's going on inside that Euro-Japanese yen? It's proven itself to us time and time again out here, and so we know it's making or is close to making a 100% move of a move, and it's up against some strong support at 0.786 Gartley sell pattern. And if that fails, if price moves higher, then it is off to the races. Then it is off to the races inside of these markets out here. And right now we just don't have that information. But we do have this trend line that is very important when we take a look at the Russell 2000. So that's what we want to be looking at here. And why is that important? Because when you break a trend, then what you're looking at is something that could be more of an intermediate term change in direction out there when you break a trend. And that's important. Because right now, from an intermediate trader, from your 401k type investments out there, your longer term, we know the trend hasn't been broken. All you've seen here, if you were going to use the monthly chart as your indicator as to whether to be in or to be out, all you've seen is a lot of theater out there, like we saw back in December 2012. Turned out to really be nothing more than theater out here. I think that's a lot of what's going on with the high-frequency trading book that's out there, a lot of theater, and so depends on which side you fall back on. I think it has been interesting theater to watch everybody's views on what's the guy's name, the author of that book. Anyways, you know what I'm referring to. So in any event, a lot of theater that is going on out there. So we're going to watch the theater of these markets here. Right now, the Dow's up 3, S&P is up 50 cents out here. Composite has just turned red, so that's interesting, isn't it? Because composite, again, was leading the charge here this morning. Now that has turned red out here, just as the Russell 2000 has turned slightly red as well. And so has the SOX. So let's go take a look at the SOX index, because that thing has been a little ball of fire, not a little ball of fire, a big ball of fire out here, making, again, all-time highs. Almost looks like a 3 drive to a top pattern, doesn't it? Let's go market. Let's go see what it is. Let's take a look at drive 1 was out here that you'd use would be the March 7th high. Come down to the low here on March 14th. Second drive would be right out here on March the 21st. And is the third drive here today? No, it's not. It's a nice expansion. It's a 1.272 expansion out here, but it does not qualify as a 3 drive to a top pattern, at least with regard, because I'd be forcing it. And look, we don't need to force the issue. But what we do know out here is that today we want to be paying attention to this brief sell-off that we have. Does it last? And if it lasts, does it close below 589.52, because this has been strength, right? So I was talking about the importance of learning from weakness, that being the NDX 100, the NASDAQ composite. When it comes to strength, you see really the strength that we don't want to necessarily pay attention to. This market's not going to go lower without the financials following suit and without the semiconductor index following suit. There's just no way that the market is going to go lower without those two participating in any type of down move out here. So that makes today's session important. Why? Because it closed below 589.52. That would set up your bearish reversal signal. That would set up a bearish engulfing candle out there. And then strength would be communicating to us. The last time we saw a bearish pattern out here, well, it happened to be the trading session, this key reversal session from March 26. Right now, the high, 591.11, is your support area. We'll see if that can be breached. If not, maybe it just is tested as support, and these markets just motor on. Right now, we've got a flat market. Let's go barefoot water skiing out here, because that is the best time to go barefoot skiing on the water when it's nice and flat. 877-927.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direxion Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at DirexionFunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direxion Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Funds. To obtain a prospectus or summary prospectus, please contact the Direxion Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's see. We got the Dow up 5. S&P is up 1. Let's continue checking around, see what we've got going on in the marketplace. Not much with regard to the index. So let's take a look at what's going on inside some of the stocks. Let's go take a look at our core holdings out here, see what some of these equities are doing. So you got Intuitive Surgical Priceline moving higher. Let's take a look at Intel. So Intel has, what has Intel done here? Intel got into the gap, wasn't able to close it, which is kind of interesting. Of course, nothing is over here. We're taking a look at the semiconductors. Now, Intel, I wish I had it off the tip of my hands here. I don't. Intel is one of the top 5 holdings with inside the semiconductor index. And what was so interesting about the semis is they really moved higher without Intel. However, maybe that's not going to be the case here to the downside. So what Intel has done, it moved up into this little downdraft, a big downdraft of volume-wise 112 million shares to the downside on January 17th. Now, that truly qualified as volume off of the highs out here, off of the top. Now, it wasn't all-time highs, but most certainly was volume off of the top out here. And price came back into that area. It only closed one day inside of that area, which happened to be yesterday, by the way. And today it's giving it up. Now, let me put up the relative strength indicator out here. Let's see. So you're up towards the bought level. So we know this condition needs to be worked off. However, because you are up towards that oversold level, because you've got really an A to B equals C to the upside, right? If we take a look at that, your A point starting out here on February 5th. The B point that I would use would be on February 21st. Oh, that's funny. Why did that not work? Anyways, your C point would be the March 3rd candle session. I don't know why I lost that altogether. Well, that's interesting. Nonetheless, what we want to watch for inside of Intel today is intercession. If this thing were to get below 2564, 2563 works. So if it gets below that, as long as it closes red out here, Intel would have formed a key reversal session. Now today, right now, it's more of a bear sash candle out there, but we'll want to watch for some type of signal like that. We'll want to watch inside of Intel. So Intel may have extended itself as far as it's going to go before it begins its pullback out here. It's up against that resistance area. Where could it pull back to? Excellent question. Thanks for asking. I would say that you pull back to the 0.382 level, 2508. Not a big deal there. 2448 would be your 0.618. That would seem the level of where it would pull back to. It's built a bit of a base out here. As the semis were moving higher, what Intel was doing back in the early February timeframe was just simply moving sideways, building a nice little base out there. Built that base all the way up until the middle of March 19th to be exact. Let's take a look at some of these other equities here. Priceline, let's go see what was Priceline doing. Priceline formed a 1-to-1 A to B equals CD. It did make a hammerish style candle out here on March the 27th. What have we seen here thus far as retracements? What we have seen is a retracement up to and above. So yesterday's candle here, nice wide-ranging bar, get into the 0.382 retracement level. Says that what it should be able to do is should be able to get up to 1293. It's trading at 1261 right now. The volume yesterday was 1.2 million shares going into 1.4 million shares. So really not too bad with regard to its bounce out there. Let's take a look at ExxonMobil. What's ExxonMobil doing out here? ExxonMobil trading right now at 97.49. It completed and filled a gap, so close the gap out here. I had the bottom of this gap, or the top of this gap. Let me go ahead and move it. So the session that we're looking at, we had a nice downdraft inside of here. There's a significant resistance line inside of ExxonMobil, so that's interesting. So with ExxonMobil being a significant portion of the XLE, if we were to see the market crack here, this would bode well for an interesting potential trade out here. And what am I talking about? First, let me get rid of this little consolidation box. So let's get rid of that one right there. Okay. So if we take a look at ExxonMobil, the trading session of January 22nd, January 23rd, gaps down with 15 million shares out there. And what we saw it do was it get up into that level with 12 million shares on March 28th. Gets up, tests it. For my work, it closes the gap when it does that. Or at least at this stage here, it acts as a resistance level. Closes below it. What does it do on the very next trading session? Hey, it moves higher with the same volume, 12 million shares, but closes back down below it. What did it do yesterday? It got up to a high of 97.93, closed back below it on 9.4 million shares. ExxonMobil is communicating to us it does not have the volume behind its move to break that. This is a really strong resistance level. Just as if it were to get above that area, that will become a new support level inside of ExxonMobil. But interesting. Very interesting, as Schultze like to say. Right now, we got the Dow up 13, S&P up 2.5, Composite up 8 points. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Now we've got a little life in the markets here. Dow's up 23, S&P up 4, NASDAQ up 7 points, Russell 2000 up $1.30 out here. We were talking about ExxonMobil. I was speaking about ExxonMobil before we went into that break. Now, I believe it's ExxonMobil, Chevron, CVX is ticker symbol there, and Schlumberger might make up the top 3 holdings. I believe just ExxonMobil and Chevron is like at least 30% of the XLE of the energy sector. So when I pulled the chart up here, I haven't looked at Chevron for quite some time. We can see it bounced out of a really significant oversold level. It made a oversold level back on February 5th. Now it's moving up towards the overbought area. Not there yet, but what's interesting here is I put up the 50-day and the 200-day exponential moving average. And as you probably know, when the 50-day crosses through the 200-day, so on my screen, if you're watching this on Tiger TV, the 50-day is the red line, the black line is the 200-day. When it crosses through, it's considered to be a death cross. It's considered to be when it has turned into a true bearish mode out here. And look, that occurred back here on the trading session approximately of February 3rd out there, and certainly we have not seen that come back. So we've seen a nice move. Now, where could this possibly take us? Well, the B point out here of an A to B equals CD. This took place on February 28th. The volume there was 6.9 million shares. Price got up above that level with 5.5, 5.9. So it's still trading above that area on lighter volume. If we take a look at that A to B equals CD pattern out here, it would look like this. and that would say that price could still move up to about the 121.17 area. What do we have hanging out at 121.17? We probably have a good old sweet 618. So this has made the 0.618 retracement level. It did that 2 trading sessions going yesterday. 119.39 was the number. You got up to 119.62 on what today's Wednesday, on Monday. And yesterday you got up to 119.61 out there. So a nice point, nice Gartley pattern with the A to B equals CD, and it would complete somewhere between 121.17, 122.14 out there. Yeah, prices above the 50-day, but again, if the markets ever do sell off, and you'd want to come back and take a look at the XLE, that's for sure. Now let's take a look at Schlumberger. What is Schlumberger? SLB, I think, is the ticker symbol. If memory serves me okay, and if it doesn't serve me, then we're going to take a look at SLB anyways, and whatever that could be. SLB could be a marble slab, right? We could make that. Have you ever had a marble slab ice cream out there? They're pretty good. I haven't had one. I heard they're pretty good. No, I've actually had a few. My favorite. I don't. What's your favorite flavor out there? Well, my favorite flavor is the kind that doesn't get you sick. You know, they use so much acid and stuff in that stuff. And my favorite flavor is lemon with coconut mixed in it. That is a beautiful thing. Let's go to John in Sarasota. He's not on the phone. Well, we were going to go to him. We're going to go to John in Sarasota in using a mental telepathic move out there. And so we'll do that because he was calling about the NUGT, which is moving nicely, I believe, this morning here. And then we'll go back and we'll take a look at the Schlumberger. So NUGT is the ticker symbol. I'm going to assume that John was looking to play this to the long side. So let's take a look at Nugget. Today it's up, trading out at 37.62 out here. It's up with pretty decent volume, 2.9 million shares. Why do I say pretty decent volume? Well, I'm just simply benchmarking it as to what it is going against. Going against right here the March 26th area, which has 7.3 million shares. We have only been trading here for about an hour, so not too bad from a volume standpoint. I would say you want to see that level get taken out. You'd want to see it close above that. If you're already in the trade, you certainly want to be able to see it close above that candle session out here. Where could this trade to? You know, it does, as I took a look at gold and silver, both gold and silver specifically look like it may want to bounce here. That what we could see is a little short covering rally. Now, I'm surprised that it actually stopped this morning where it did. It's up right now 35 cents, about 1 8/10%. It's trading at $20.04. It's been hanging out at $20.04 for quite some time. Now, it's only traded higher by another dime out there, but a dime is a lot inside of silver when it's trading out at 20 cents out here. Gold really hasn't done much at this stage either. So yesterday we saw the XAU and silver trade just slightly higher after being down for so long. If I put out the bought oversold indicator, you can see it was moving down towards the oversold level out here, and therefore in order for this to really get moving, you need to see it take out that candle session from March 26th out there. Where could it move to? Look, 43.33, even 49.50 on a big enough bounce out here is a doable thing. So if you are long the gold and silver miners out there, what I would suggest, having taken a look at each of the equities with inside there, is if you're going to try to make some kind of play here, I would go and look at each of those equities and try to find the handful, and I do mean handful. There's like 4 or 5 of them, which have now been whittled down from, I think I started at 35. There's about 4 or 5 that have acted really well here on the move down in the markets, and I think your better trade would be to go ahead and take a look, as opposed to playing the entire basket, would be to go ahead and take a look at those. Because if you take a look at patterns out here, you know, if we look at coming off of the low back here inside of the Nugget back on December the 19th, really we should probably look at the GDX. You know, retracement-wise, you're kind of in between floors, in between the 0.786 and the 0.382. It's been a straight line down. The problem with straight lines down is any bounce out here, and why this could be nothing more than a counter-trend rally, why we need to go take a look at it, is because, this could be forming the B to a C of an A to B equals C to the downside. It doesn't mean you can't trade it, but that's what I'm looking at when I take a look at gold, silver, as well as the miners. And trust me, this morning, as I was last night looking at the potential for a bounce inside of silver, which is why I was investigating that whole area, was what should we take a trade here or not? And at this stage here, I elected not, primarily because when I took a look at what it was doing, taking a look at the, and I did this during the first hour out here. Let me put it back up on the screen so we can see what silver is doing as we speak right now. As we took a look at the market profile on the daily charts for silver, what it showed here. There we go. Put this on the screen here. You know, it's really got to clear this $20 area. He's trading at 20.04. That's not a big deal out here. So it's held. It hasn't really tested support, which is down about 1936. Right now, you've got price just kind of hanging out where there's a lot of orders, both on the buy and on the sell side out here. So it has not yet, silver has not yet convinced me. If we go take a look at Goldilocks, do the same thing. I'm just going to pull up the continuous contract. I've got more data to select from with regard to these market profiles out here. We'll pull up the daily inside of gold. There we go. We've got the daily, and you can see inside of gold here, you're kind of like in never land out here. So you're neither near a support or resistance level. In fact, support inside of gold is $1,228. And this is a new profile here that set up today, as a matter of fact. The old profile would have taken us down to about 1207. So right now in Goldilocks, it's really in the middle of nowhere. And so that was one of the reasons to. So you got a nice bullish engulfing candle that is forming here today. So that's my thoughts there, John. And the nugget trade. So I hope that helps you out. Now let's go back and take a look at Schlumberger, SLB, see what it is doing out here, because that is the third. Well, it's in the top 5, most certainly inside of the energy sector, inside the XLE, and you can see this thing has been strong. So we've got let's see if we had a confirmed A to B equals CD up. How do we know if we have a confirmed? Well, we'll take the swing point here. That's from the trading session of February 28th out here. Let's move that off to the side. Let's go mark that here. Let's go mark the actual candle session. That candle session being right here, and that's on February 28th, as I say. As price got over that level, it did it with volume. So this had a confirmed A to B equals CD up. You can see it approached that area with volume and was rejected back on March 24th. That did 7.3 million shares, going into 5.9. Even though it was rejected, it had volume pushing in there. It said it would be back again for a test. And, heck, it wasn't just back for a test. It gapped up the very next morning. Now, not a gap with regard to the candle session in its entirety, a gap with regard to where it had closed on the prior session out there. So a strong move inside of Schlumberger. If we take a look at its A to B, the smaller A to B equals CD to the upside here, we're going to see it's already made the 1-to-1, A to B equals CD. Strong move along that C to D leg, tells you it wants to move higher. 99.02 is likely the area where it wants to trade to. Now let's go see what kind of pattern it is setting up here, because that's important. And if we take a look at coming off of the swing point highs, cluster of candles of, looks like tweezers out here back on October the 22nd, and we come all the way down to low on December 18th. You'll see right now prices at the 1.272 or just above that expansionary. So it would look like Schlumberger here may be starting to run out of petro. How about that? Running out of a little bit of gas here. We'll see how this trades today. This may have made its move because, in essence, it's made a 1 to 1.2. It's made a butterfly pattern, or it's very close to making the butterfly pattern. It'll look like this. We go ahead and we color it in on the chart out there. It says 1.36, but you'll know that's close enough to 1.272. Let's get rid of some of those other tools, and there's your butterfly pattern. Now, in the case of Schlumberger, we don't have a reversal signal out here today. What you could get today is a doji candle, and if you got a doji candle today, I'm going to clean this up just a little bit more here. We don't need to be paying attention to the price out there. If you got a doji candle, that means it would actually close today at 98.07. We'll give it 98.09. Would be 98.09 to 98.06, something right around that range. You get a little doji candle. And that doji in Stevie's window out here would say, if that's what we got and we saw a lower close tomorrow, that would say the leaves are beginning to fall off the tree. And that's putting it together with regard to Schlumberger, Chevron, and ExxonMobil out there. So covering, I think, maybe the top 3 holdings inside the XLE are very close to it out there. But the markets here, they're motoring on higher, so that means we got to go take a look and see what's going on with the euro yen. Let's go see what it is doing. We know that was either has or is in the process of making a 100% move of a move. So you got this thing is not exactly moving higher with these markets. So that's always something to think about when we see that taking place out here. I'm going to go take a look at the intraday time frame here. Let's look at the 120-minute chart. In fact, we'll back this one off. So the 120-minute chart, right now it's not backing off with a vengeance here, just kind of an orderly back off, of course, where we can see that it did form this little evening star formation candle out here. Pretty close to it. Yeah, it looks like it probably did form that here as it was making its high here this morning at 3 o'clock in the morning. Has not backed off much. The real key here, probably on the Euro Japanese yen. Take a look at the 120-minute chart. What we know about this is it moved back up into its rising price channel. And so I would have to say it gives us a big signal if it gets back below that area. And that's that black diagonal line that is on my screen here right now. What's that going to be priced at? Great question. Wish I could give you the answer. Because it's rising, I don't know. You'd have to kind of time it as to when it would hit that level. But it's probably right around the 142.40-ish, 142.50-ish type range out there. If you see it close below that on the 120-minute chart, it will have given us the that signal. What we do know that it's doing here is that, number one, it was over bought. And so it's working that condition off. We can see it got in the extreme overbought condition. There was no price relative strength divergent pattern out here. So it did not have that. Whereas we've seen that here at the bottoms where there's been some significant bounce. So we have not seen that here as it formed this high. What does that mean? Yeah, it means what it means. It means that move higher, there was some real juice inside it. It was a real move. It was not a false. It's not a fake move, even as it was making its highs out here. So we have to watch how this oversold condition really does get worked up. But boy, you get back below that rising price channel, and that probably sends a message. If I go look at a 30-minute chart here for the currency pair and see what it is doing, no price relative strength divergent pattern here as well. And on the 30-minute chart, you can see how price has moved lower. Hasn't gotten all the way down to the bottom of that 14-period relative strength index, but it's gotten fairly close out there. So this shows still a real strong trend as well. 30-minute chart really not providing us with a ton of information out here, so we'll go ahead and flip it back to the 120. Let's go take a look at bonds, light sweet crude. Let's do that, see what we've got going on as we take a look at bonds here this morning. On the continuous contract, that is moving lower, so it's moving back into what should be a support area. So here, if we take a look at the last time that we saw a bullish reversal signal is right here. Here's your Morningstar reversal. That says the support level from March 20th, 131.24 is important to hold. Has not tested that level. That had 376,000 contracts so far today. About half the volume, done 168,000 contracts. We'll see if that area here holds as support, if in fact it gets tested. The case of a light sweet crude out here, light sweet crude right now, just kind of holding its own. It too, take a look at this 120-minute chart here that we're looking at. Light sweet crude is in the extreme oversold condition, and it's not even been able to get back above the 30-line level of that 14-period relative strength index. This is weak. This is absolutely weak out here, but it's due for a bounce to work off that condition. Right now, Dow's up 24, S&P is up 3.5, NASDAQ up 6, Russell up $1.70. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Alrighty, folks, let's try to recap where we're at in these markets here. Let's make we take a look at the December 31st swing point inside the Dow. Come on, get up there already and give us some information. The top there, 16.5, 16.5, 88, 25. So far, intra-session high. It has pierced yesterday's high, 16.5, 69.03. It's the little engine that can. The question is, when will it do that out there? When will it spike that? Now, it's not just when will it spike it. If it spikes it, does it hold that level out there? And if it does, what kind of volume is behind the move? So that's inside the Dow. If we go take a look at the ETF, the Dow Diamonds out here, and take a look at yesterday's session versus the swing point that it was running into. Let's do that here momentarily. Let's take a look at that swing point that it was dealing with of a B point of an A to B equals CD. We covered this yesterday. And remember in the first hour of trading or more, this had some pretty good volume. And it really dropped off. I mean, the volume was the March 7th candle, 7.3 million shares. Looked like it would have the volume in that first hour of trading. And then, boom, nada, not even close. It did only 4 million shares yesterday. Now, look, it got above that level. But all that really says is, hey, you're really trading inside the December 31st swing point. And even that, as we pointed out yesterday, that was December 31st with 5.6 million shares. Not exactly like that's a full day of trading. Was the market open for a full day? Yes. Was it a full day of trading? I think not. Too many people out there had their party favors on, had their 2014 glasses, and the mimosas had started early in the day for many out there. So it moved into that swing point yesterday with light volume. What do we have going on today inside the diamonds? 2.7 million shares out there. I don't recall what the volume was last week after the first hour of trading. Well, I guess we could finish that. We could figure that out. Put this on, a 60-minute chart out here. We could go compare yesterday to today. So if you told me, since you asked me to do that, let's go do that out here right now. Oh, come on. Give me that. Give me that for these folks out here. They're waiting patiently. Please, you gods from the Ensign Windows, give that to me here quickly. Unfortunately, I have so many applications running. Looks like I'm a memory hog out here. Okay, now we're talking. All right. So yesterday, the first hour of trading, what we saw was 1.3 million shares. That was a 10:30 session out there. What do we see today? 1 million shares. So you've got even lighter volume today by about 30% out there. Let me see. 517,000 by 11:30. Today, 1.3 million. So, okay, the two sessions here, looks like the two sessions right now about equal to each other out there, and we still have more time left in the trading session. In any event, that's what the diamonds, that's what the Dow is trying to do, is get up there. With regard to the most bearish signals that one could find in the marketplace, it's just simply inside of the NDX 100, which and the composite. Right now, the composite's up 9 points. The NDX is up about 7 points out here, and the Russell 2000 up 2 points. That's still not enough to turn the trend to the north out here. It's still inside those indexes. It's still nothing more than a counter-trend rally. That's the most bearish thing that you can find, because in the New York Stock Exchange, the wider swath of the market, inside the Wilshire 5000, an even wider swath of the market, there's no bearish signs there. New York Stock Exchange specifically, you've got the oscillators above zero. You've got the summation index pointed up. You've got the price oscillator above zero. You're above the 2007 high out there, so that's bullish. Of concern is going to be, hey, what's our currency pair? What is that going to do? The euro, Japanese yen. We've got the VIX index. It's traveling below the 50-day exponential moving average. Is slightly lower than yesterday's low. Yesterday's low was 1306. So far, we've seen a low today of 1293 out there inside the market. So everything is all set for our man Basil Chapman. He'll be up next with you after Basil. I don't know if Larry is here, if Basil's going to do a 2 hours for you. And then we've got Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. Thanks so much for joining me, folks. Always great to be with you. Have a wonderful Wednesday. And, yes, looks like Larry is going to be with us. Take care now, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.